Despite being relatively small as a whole, the real estate sector in Central and Eastern Europe cannot be treated as a homogeneous market.
We've moved past the one CEE market quite some time ago. The days of looking at the market as a whole and going in there saying we want to do CEE, both on the service provider and the investor side, you don't really see that anymore.
The markets are stable. We've got smaller markets other than Poland. I mean, let's be honest, Czech, Slovakia, Hungary, Romania, relatively small markets. The only large market we have is a Polish market. And that's been the darling of Europe for 10 years maybe, give or take. Czech Republic has been the solid one, very conservative, doesn't really peak, doesn't really trough. You can rely, you can buy things and sell them there. Slovakia, Romania, Hungary, for various reasons, and Bulgaria are different, are viewed differently, and rightfully so. They're not as mature. It's just that where they are in the cycle. But they're emerging, and there's fantastic things, and there's great stories going on in Romania, Hungary, and Slovakia, Bulgaria as well. So
Poland has been the leading market in Europe. Particularly last year, it was 45% of the overall volume in the CEE, including Russia. Poland, obviously, due to the scale, is growing much faster, and there is a lot of supply coming on screen. But at the same time, this is accompanied by demand that really goes along with it. Also, it's a great example where there is a substantial office development pipeline, particularly in the next 2 years. But at the same time, there is huge absorption in terms of net levels. It was 300,000 square meters last year, which was a record high, and by more than 50% exceeding the 5-year average.
The Czech Republic has a wonderful year in 2015. It's been a record-breaking year in all property sectors. The volume was more than 2.5 billion euros. The odds are that this is going to continue. It's not becoming any weaker. I think retail and logistics will be particularly strong.
Starting with last year, we have been seeing more and more interest towards Romania. The funds are looking, of course, for good yields, but seeing that Romania has been registering very good macroeconomic indicators for the last 3-4 years, and this will be the fifth, basically, we see that they're getting more confident about the market.
The Bulgarian market is growing slowly, probably more slowly than some of the other regional markets. There's been not necessarily political problems, but there's a perception from the outside that they haven't gotten past the corruption issue yet, which scares some foreign direct investors. And that being said, it's also a very small market. So you don't have people rushing in for the big prize like you would in Romania or Poland, for example. But having said that, we see the market picking up long before others because we do the due diligence, we're on the front end with the structuring, so it's been a cautiously optimistic period.
The Serbian market, after years of basically stagnant conditions, has finally seen the first income-producing assets and the first investment transactions recorded over the last 2 years. Before that, most of the transactions occurring were for greenfield projects or for distressed assets. And in the last 2 years, we had several shopping center retail-dominated assets which were sold to foreign funds, investment funds.
In one of the smaller markets, a single transaction can turn out to be significant and can result in a percent growth of several hundred.